For decades, we have defined ourselves as financial inclusion specialists. But financial inclusion is not impact. It is literally just there to help the clients that we serve achieve their goals. Our goal and our mandate, and what I tell my team on a almost weekly basis, is not to get every farmer in Sub-Saharan Africa in debt. Our ambition is to see their livelihoods change.
This is Financial Inclusion Unlocked, an SIJ production. I'm Jack Farron, your host, and this is the show that meets innovators and leaders across the world to discuss how can we unlock the potential of financial inclusion as a vehicle for the SDGs. This is a show that is produced by SIJ Media, and our first series is sponsored by SCBF. In this episode, I meet with Tim Strong, Head of Agricultural Finance for Opportunity International, on a cold January day in London to discuss how financial inclusion can be a vehicle for smallholder farmers in Sub-Saharan Africa to achieve their goals. We chatted about so many interesting topics, including AI chatbots, incentivizing farmer support agents, and Opportunity International's new strategy on guaranteeing opportunities for rural women. Enjoy the show. Tim, thanks so much for joining me on the show.
Jack, it's an absolute pleasure. Although I'd say that this is not really the climate that I'm well accustomed to. Here in the UK is a bit chillier than
it's freezing, right?
than southern Malawi at the moment, which I think is about 45 degrees centigrade versus the 4 degrees here. Although I'm told that it's all relative, and there are colder places in the world.
But even for me, that's too warm because I'm too used to the British winters. But Tim, on the topic of Malawi, I know your journey started in the US in studying in UC Davis in biochemistry, molecular biology, and plant physiology. So how did your adventure take you then to Malawi and Southern Africa, working with smallholder farmers on inclusive finance topics?
Certainly, thanks. And Jack, I like to try to describe the narrative of my career progression as the constant exploration of the word no, if that's fair enough. But really this idea that when you continue down a certain pathway, you start to hear the word no being repeated more loudly. And that's a pretty good indicator of the direction that you should push your work. So myself, originally at UC Davis, studying kind of the biotechnology space and really the gains that can be done in agriculture through that. Worked with the United States Department of Agriculture and a lot of the agricultural research services, looking at how do we support the American version of smallholder farmers, so really niche farmers that are being pushed out of the market. But then I had a huge displeasure of working on a number of commercial farms in the morning before that, and I had some trainees who were, little did I know, the United States Peace Corps recruiters.
Okay.
So a lot of conversations at 5 a.m. around a tractor, really discussing how is what we're doing advancing global food security by really supporting the wealthiest farmers in the world. There's so much work to do outside of the U.S., and why not really push ourselves to think bigger? Again, look at that word no. So it was a bit of a journey. Worked abroad for quite a number of years before actually joining the Peace Corps, and it was the U.S. Peace Corps that sent me to Malawi. But really this idea that farmers who are producing our global food supply really hear the word no more than anyone else. That's what led into agricultural finance. The principal no for farmers was when they were trying to get financing to improve their agricultural productivity.
Wow, because I know smallholders, grow even more than a third of the entire global food supply. But why did you choose Malawi once you had that experience with the US Peace Corps? Why did you decide to stay?
What's the expression? Beware the permanence of temporary solutions, I guess. No, I think it's having lived now more than half of my life abroad outside of the U.S., primarily across Africa, but also worked quite a bit in Asia. To me, I think what I was looking for was really a place of peace, more than anything else. And Jack, you have enough personal knowledge about the Republic of Malawi, and really a country that has never experienced a war. And really the sense of what we describe ourselves as is the warm heart of Africa.
Yep.
I think is really a truism that I do my best, I'd say, as an adopted child of the Republic, to try to represent that same ethos myself as much as possible.
Fantastic. So on that first visit to Malawi with the Peace Corps, what exactly were you doing?
Pretty much the same thing I'm doing now to a large degree.
Okay.
Most of my work was really focused on soy farming cooperatives. How do we structure them? How do we get improved seed varieties to them? And how do we improve access to markets? I would say, however, though, my formal assignment, my principal assignment with the U.S. Peace Corps was alongside the Department of Forestry. and a forest reserve in central Malawi, working primarily on what's called human-elephant conflict.
Okay.
So it was a pretty romantic start to my life in Malawi, where we were really trying to solve some of the tension along a national forest reserve of elephants coming and destroying farmers' crops,
Right.
farmers going back and retaliating with the elephants, and this constant escalation. So it was just a really unique start to my time there.
Wow. Wow, that's so interesting. And to take it then to Opportunity International, the Chicago-based international NGO, I know you do a lot of work, the NGO does a lot of work around education finance, refugee finance, but you're leading the agricultural finance programs and initiatives. So what are some of the key challenges that you found with smallholder farmers in Malawi and some of the other markets that you're working with, that you're trying to address?
There's a New York theologian named Frederick Buechner, and one of his famous quotes is, "The intersection between the world's great need and your great passion is your vocation," right? And really, I'd like to say I can apply that the best to myself, saying that I really find a place that is that intersection. But I would say even more strongly than speaking about myself, the farmers that we do serve, they see agriculture as a vocation. They see themselves, as you mentioned, a third of the global food supply. They see themselves as feeding the world. In developing markets, they also are responsible for producing 80% of the domestic food supply. So when we think about the importance of that, Malawi is really one of these exemplary markets when it comes to the importance of agriculture, where almost 80% of all Malawians are involved directly in agricultural activities, and really the importance that it shows. However, a lot of the challenges that they face are, sometimes when you step back to think about them, almost insurmountable. So, I'm always keen to make sure that we represent the strength, the durability, the extreme passion that the farmers we serve have to continue despite challenges with low productivity, right? So in general, smallholder farmers around Sub-Saharan Africa produce at 20 to 40% of their potential yields. That's principally due to a lack of certified inputs. So when we look at improved seed varieties, Kenya has done amazing work, and Uganda is following suit, and Tanzania and other markets in terms of stop fake seed activities. Really, how do we make sure that the supply chains are legitimate? But in terms of working alongside that technology of improved seed, the principal technology that I see for farmers that many are struggling with more and more every year is really the technology of soil.
Okay.
So when you see soil degradation at the levels that we're seeing for smallholder farmers, given that we're looking at practices that were developed in the 1960s and really on the principle of a World War II based economy, how do we make sure that soils are being invested in to the same degree? So that's on the productivity side. On the market side, it's absolutely broken. How do we make sure that farmers get good prices for what they need? We have both the pleasure and the pain of having sat on 13 years of business risk reviews for agricultural finance, and these are essentially the three principal things we look at. First is production risk, right? Will there be rain? Right? The majority of smallholder farmers are in rain-fed agriculture. Also in production are the farmers practicing good agricultural practices. Yep. There's also a lot of, I started with rain, but there's also going to be floods. There's just so many different contexts that will really reduce yields, that'll keep farmers from really achieving their potential. The second one that we look at is really this market risk that I just mentioned. So really looking at, is there a potential for an offtake contract? Can farmers really negotiate on their own behalf to make sure that they get the price they need? This is a huge challenge globally, as smallholder farmers are typically price takers as opposed to price makers. So what happens if you're a vanilla farmer and the Madagascan crop comes in first? The entire price changes. Or if you're a soy farmer in Malawi and the Brazilian market comes in first. These are massive challenges, but specifically in terms of accessing finance, the third and what I would say most important risk and challenge for smallholder farmers is the ability for a financial institution to actually serve them. Yeah. So when we do our business risk reviews, that's actually more important. It doesn't matter if you have the best farmers with the best rain and the best markets if you can't get them a loan in time. One of the lines that Sakina Mandanda, who leads our financial services team, uses during a training is that credit delayed is credit denied. So really, how do we make sure that we overcome the challenges that are represented if you have tens of thousands of clients all needing loans at exactly the same day? So operationally, it's quite challenging.
So just talk to me about the landscape then of the Malawian financial sector and the types of institutions involved and how they serve smallholder farmers in the most remote and rural communities in Malawi.
Yeah, I think really zooming in on the Malawian context is an important one, but you start to see these same models replicated in almost every market that we do work in. A lot of surprises have happened for us over the last few years in terms of really our evolving belief in terms of who can serve smallholder farmers. Our background as Opportunity really has been looking primarily at the tier 2 microfinance level.
Okay.
So really looking at smaller microfinance institutions, their ability to really work with a more rural client base. However, just absolutely amazed in terms of the tier 1 commercial banks who have really picked up a lot of this cry for rural finance, and under a lot of really deep and important conversations about the relevance of smallholders for national food supplies, for patriotism in our markets, and then even seeing the value, the lifetime client value for a financial institution that's willing to serve a farmer as they grow and continue to expand their businesses. One of the most horrific statistics I've ever come across is a United States one that Americans are more likely to be get divorced in their wedding or from their marriages than they are to change their bank account. However, the other statistic is they're also more keen to clean their oven than they are to talk to their banker. So trying to balance those two things.
Yeah, and it's not very common to clean the oven.
Yes,
yeah.
Indeed. What I think has been most exciting for me, though, is as we look at kind of the broader landscape, so your tier 1 commercial banks, your tier 2 microfinance institutions or savings and loans institutions, is really kind of the tier 3 space that's coming in now in terms of microcredit institutions. The reason why it's exciting for me is if I take an example from the Rwandan industry and really what we're starting to see evolve now. I think many of the listeners on this podcast will be aware of a lot of the unregulated financial services that happen. Yes, there are a lot of issues with what are called caterpillar loans and other almost predatory lending mechanisms, but one of the most common access to finance tools are farmer-owned, and really the village savings and loans associations, also known as community-based financial organizations or savings groups or affinity groups or silks, or there's just so many different names for these, right? But one of our current partners is a tier 3 microcredit institution in Rwanda, was originally a village savings and loans association. And they grouped up with another one and another one and another one, and eventually became a SACCO, a savings and credit cooperative. And then they merged with another one and became so large that the central bank required them to get a banking license. So for me, seeing this progression of an entirely farmer-owned institution, and really some of our support for them is extremely tangible, right? So they needed help with a new core banking system. And we're like, we can do that. That's completely within our capabilities, and we can support this institution that's entirely focused on client outcomes to really evolve and continue to grow. And, the sky's the limit. You start to think of them overtaking the commercial banks in terms of.
That's incredible. And what kind of size are we talking about here in terms of number of clients now for that tier 3 microcredit institution? Yeah,
so that tier 3 one in Rwanda is Kliklam Ejuheza. The name is indicative of the the original SACCOs from which they were formed. But what their principal constraint in terms of lending is their cost of capital.
Yeah,
right? Because they're primarily driving their own deposits through other farmers. So they're lending at about 10% of their client base and their member base. So I think in terms of total membership, they're at about 80,000 farmers.
Oh, wow.
And only able to lend to about 8,000 per annum. So you start to see really this potential for everything that's happening in terms of the financial inclusion industry, right? So when we look at concessional debt, soft loans to financial institutions to lend to farmers, these are kind of the ideal type of institutions in my mind, where that support will really go further. We talk a lot about return on investment, and One Acre Fund has done phenomenal work in terms of developing their social return on investment metrics. But I see a few sweet spots like this where we can get really both at the same time.
Yeah. So we're going to talk now about, how to cost effectively, I guess, deliver financial services to smallholder farmers. Something you've mentioned is obviously a critical challenge, and something that Opportunity has been leading within the FSA network, the Farmer Support Agents. And it's something I've personally had, the experience of seeing on the ground in Uganda and also in Malawi, of how they work. So could you just define for our audience, who is an FSA? How do you choose them? What type of individual are they within the community?
Yeah, I mean, this for us has become the linchpin for all of our work now. So selecting a strong farmer support agent is one of the most critical activities that we do. What I mentioned in terms of the operational risks for a financial institution trying to serve tens of thousands of farmers in a single week. A lot of why we built up our farmer support agent network originally was to try to soften some of that workload for our banking partners. When we look at really how does a farmer learn, this is the basis of our farmer support agent. It's not from necessarily from a university educated agriculturalist in a suit and a tie, or a banker behind a plexiglass window. Farmers and agriculture is an extremely human-based activity. And in my experience, as short as it may have been, and hopefully many more years to come, we have found that farmers learn from other farmers. So in selecting a farmer support agent, we are specifically targeting how do we measure the value of the trust that their neighbors have in them. Really looking at trusted leaders. It doesn't necessarily have to be an agricultural expert. In terms of the lead farmers that we're looking for agents, but really, are they a reliable member of their community? Do other farmers turn to them for advice, not necessarily on agriculture, but on anything, right? And we look at a lot of the data regulations. How do we look at digital literacy on top of financial literacy, on top of good agricultural practices? Really someone who can serve as a mentor in their own community. Digitization helps resolve a lot of the issues. Luke Colson, who leads our farmer support agent networks and our client services division within our program, him and I talk a lot about the children's game of telephone or broken telephone.
Okay, yeah.
Did you ever play that one when you were a kid?
Yeah.
Where you all sit in a circle and you whisper in your neighbor's ear, and they whisper into their neighbor's ear, and it comes back to the front, and the story is completely changed. So a lot of the potential as we're digitizing our farmer support agents, giving them smart devices to be able to do their work, also has to do with consistency. So how do we make sure that they have training curricula on their phones, sometimes digitized and fully in video format, so that message doesn't change?
Yep.
That's actually more than a lot of people who, like myself, think that we are smarter than we are, who want to try to change how the story is told every time. But that consistency, especially when we're looking at trying to provide a service to people on the basis of their economic activities, right? We're talking about people's livelihoods, right? How do we make sure it's linked in a way that's really important? What I think is another incredibly important part about the Farmer Support Agent Network, at least from my vantage point, is when we look at rural economics, and Jack, I think you know where I'm going with that. Hopefully that's okay at this point, but there's been quite a few business case studies lately on some of the challenges when it comes to the solar pay-as-you-go companies that have been popping up across East Africa, and they've been phenomenal. But a lot of them have struggled financially, and it's, in my opinion, on the basis of one key factor is that rural economics are different than urban economics. And realistically, if you start at point A and you're trying to serve farmer John at point B, inherently that first farmer you serve will be the lowest risk and the lowest cost. So as you want to expand to farmer C and farmer D and farmer E, your costs will actually increase, right? And your risk will increase as well. The strength of your relationship with that farmer or with that client will decline because of the inherent nature of distance. So for our farmer support agent network, and what I think has been giving Luke the biggest heart attacks every day, is really an insistence that we have on how do we drive those costs down. So our incremental cost to serve must decrease year on year, otherwise we will lose the battle to scale.
Yeah.
So for us, it has been just a phenomenal journey from our initial very first farmer support agents in Uganda 10 years ago. And they cost us on average about $53 per farmer to serve per year. In terms of the efficiency gains that we've had, the technological gains, and even understanding what is the appropriate workload for a lead farmer. So our farmer support agents, we do not want them to work more than 20% in terms of level of effort. They are farmers, like let them continue to farm, but we will pay them incentives on the basis to continue to work. And what we've been finding through all those advances is this year, we've been able to close at an average of about $6.80 per farmer. So about an 8-fold decrease in our overall operating costs over a decade. We do have ambitions to drive that further south. So one of our big, hairy, and audacious goals is to get it down to $3.65 a day for very real reasons. Right? So as we've done willingness to pay assessments with the farmers that we've served for a few years, they've been coming back with about $4.25. They'd be willing to have bundled for the services that their FSAs are providing for them. So really seeing cost recovery, but wanting to come below their willingness and ability to pay. So we want this to really be a cost competitive advantage. And for each farmer support agent, these are our all-in costs. So the cost of making sure they're equipped with a durable smartphone and a charging bank to be able to be more secure in terms of how they're recharging their phones. There's been a lot of issues with digital fraud, as you're aware. But even the platform costs, the incentives, I mentioned Luke, so Luke's costs as well, my costs baked in there and making sure that we're capturing everything. Yeah. And if those agents continue to serve on average 120, 150 of their fellow farmers, it really is an accountability feedback mechanism. Internally as a program, we've banned the word beneficiaries, which is used a lot.
I've noticed that,
You've noticed that?
Yeah.
Right, and really this challenge that beneficiaries don't really have a voice in terms of the service they receive. How do we make sure and insist across our entire team and our thousands of farmer support agents in the field that the farmers we're serving are our customers? And they have a right to really mandate what they're receiving from us.
Yeah. Well, Tim, a lot to unpack. So let's go. $6.80 is where you're currently at for the cost per farmer for FSA services. So if we kind of list what the key services are. So you mentioned there is kind of group formation and training, and you have financial literacy, good agricultural practices. Which other topics do you lead on?
Yeah, so there is a kind of general sequence. One of the things that we are also trying to be quite cognizant of is the difference between what some would describe as technical assistance or training versus what I think would be a bit more evolved in terms of coaching. Okay. How do we make sure that we meet every single farmer exactly where they are on a continuum? So, some farmers already know exactly what they're doing. They're already formed in groups, and the training for that would be redundant. So really doing a baseline assessment is the first deliverable for a farmer support agent. How do we get them to start to build out a digital footprint and a digital profile for their farmers so we can really fine-tune and deliver that coaching and that support alongside what they actually need as opposed to a generic template. You get the list pretty much down there. So based on those assessments and those digital profiles, looking at group formation, how do they start to leverage their own financial access? So Village Savings and Loans Associations. If that's what farmers are interested in that group, then definitely promoting and pushing how do you manage a VSLA, how do you set up a constitution, how do you make sure that all the fees and penalties, including absenteeism, is recorded in that constitution. Although that is serving as a good reminder for one of the Village Savings and Loans Associations that I volunteered to be a part of. I don't think I've gone to a meeting in almost a year, so I think I'm racking up some pretty big absentee fines to make sure
when you go back to Malawi, I think you need to
settle that. So that's a really important piece, but within that is also a lot around group cohesion and a lot of the social dynamics. How do you really learn to trust the farmers around you? A really phenomenal, really metric that came out of the United States, USAID's Bureau of Humanitarian Assistance was looking at indicators to measure resilience. And one of the principal indicators they found was social cohesion. This is really striking for me, even a year and a half ago, visiting farms in my original hometown in Northern California that had been affected by the forest fires. And the only farms left standing were the ones where those farmers had really the ability to call their neighbors for help.
Yeah.
This is incredibly important. Right? A lot of really the content that farmer support agents also really support their fellow farmers with is around good agricultural practices. Currently, we are almost solely promoting the current curricula from ministries of agriculture. However, we've been working with a number of district level offices to start to develop locally led adaptation solutions as well. So looking at regenerative agriculture practices that farmers can use to really continue to co-invest with us in terms of their soil health. There is a lot that we're doing now in conjunction with other ministries, the Ministry of Trade, in terms of cooperative formation. So how do you start bringing together like-minded village savings and loans associations to build umbrella cooperatives so that, one, they can access better financial terms, so being able to move from a microfinance institution up to a commercial bank, which requires legal registration, a tax ID number, which you would need to be a cooperative to be able to access that. The other piece that we're extremely excited about with the cooperative development for farmers is their ability to start even negotiating on their own for better market prices. So one of the questions we've had to ask ourselves over the years as one of our key tenets was access to markets is what should our role be in this? How do we effectively work ourselves out of a job? And the potential to equip farmers to access their own markets, to look at the maths on their own right, and really see where the best opportunities are for themselves with the right information. When we look at the basic tenets of good economies, really that clarity of transaction costs is a key one. So it's a really exciting piece for us in terms of the agent networks. And we also use them to help us get census level data in terms of impact. So of course we do higher rigor evaluations along the work that we do, but at the same time are able to ask through our agents to every single one of the farmers that we serve the two things that we are interested in for our agricultural finance program. The first being, how has your yield changed? Are you increasing what you're able to grow through this work? And then the second is, how has your income changed? Those two things is kind of the key principal drivers of our entire program.
Yeah. And I guess that's when you look at financial inclusion as a vehicle, as an enabler of many of the SDGs, I guess the outcomes that you're looking at are those 2 points.
Yeah, and for kind of a nerd like myself that likes logical frameworks and everything that we do, what are your key activities? What are your outputs? What are your outcomes? And what's your impact? Right? And this is something that we've had to come to terms with ourselves. I know many in the industry are starting to evaluate this, where for decades we have defined ourselves as financial inclusion specialists. But financial inclusion is not impact. Like, it is literally just there to help the clients that we serve achieve their goals. Yep. And making sure that we have a laser clear clarity in terms of what those goals are critical. So, our goal and our mandate and what I tell my team on a almost weekly basis is not to get every farmer in Sub-Saharan Africa in debt, right? That's not our ambition.
Exactly. Yeah.
Our ambition is to see their livelihoods change.
Yeah, I think we need to put this as the series trailer. That's the statement.
Before we carry on, just a quick mention for our series partner, SCBF. In Mali, SCBF supported Kamide, a local NGO, in scaling up a self-help group model that was adapted from India. This approach focused on peer learning, role modelling and financial literacy, equipping rural women with self-management skills and financial independence. The model's impact is clear, as more women access larger agricultural loans through MFIs after demonstrating effective self-management. By the end of the project, around 3,400 women had benefited, improving their livelihoods. In 2024, SCBF supported Kamide's expansion into a new municipality, enabling 1,400 additional women to access refinancing for livelihood growth. SCBF's support has empowered women, transformed communities, and contributed to sustainable development in Mali. To learn more about their work, visit their website at www.scbf.ch. Now let's get back to the show with Tim.
Just briefly back to the FSA network,
Yeah.
you mentioned around the consistency of the content delivery. And this is something I definitely agree with, and we've seen, especially in a topic like microinsurance or inclusive insurance, where it's relatively new, there's a lot of complex terms, and we've seen there's that kind of dilution of information as it might go from the insurance company through their local offices and agent networks. So that consistency is definitely necessary. And also, what we found is, it also matters where the message comes from. So when you talk about hiring FSAs based on the trust that they have in their community and with their neighbours, the message coming from the FSA, even through digital content, is heard with with more open ears, I guess.
Yeah, I think this is where we see a lot of our cost drivers starting to reduce in the years to come. And I know I talked briefly with you about this before we started recording, but just how exciting the age that we live in is in terms of getting better content to farmers. When we look at those who are most digitally excluded in the world, by far, and being able to get them really the world-class technology that we now have the privilege of having on our personal phones every day. I mean, it is amazing to me to think in terms of what is possible for a farmer, and really the access to information, the access to finance that they can have that can even surpass what we could get sitting here in London. Right? Like, it's just absolutely amazing, and helps me get out of bed every morning in terms of what's possible, and even what we were seeing over this last year alone. Really, so keeping our clients at the forefront of everything we do. We were able to host with some of our new digital champions within Opportunity International, and just how blessed we are to have such talent coming out of Microsoft, out of Amazon, out of other organizations, and saying that they would like to work with us because it's exciting in terms of what's happening. But bringing in these skill sets of really ideation and really how do we move the needle from a standard human-centered design conversation to something that's much more evolved and deliberate. So about a year and a half ago, we were able to host Greg Nelson, who's our new CTO out of Microsoft, as well as Paul Essany, who's really a design specialist when it comes to understanding clients and their needs, and brought about a half dozen of our farmer support agents into the office and started doing card sort exercises, looking at what might actually change the needle in terms of their ability to serve farmers. And this was on the back of really a horrific time that we were having in Malawi, right? So, as an adopted son of the Republic and really seeing what's happening with changing climate patterns, we were hit just the year before that by Cyclone Anna, which was really at that point, the strongest tropical storm to ever make landfall in the Southern Hemisphere in recorded history. The next year, we were hit by Cyclone Freddy, right? So, which is now the strongest tropical storm ever recorded in the Southern Hemisphere, and it made landfall twice. And what it did, not just in terms of the mudslides and the floods between those two cyclones, but it was also a change in terms of the overall weather pattern for the season. Yeah. And as a result, many of the farmers that we were supporting, particularly in the soy value chain, experienced an unprecedented breakout of what's called soy blight, which is a fungal disease that affects the soy crop quite dramatically. That year, we saw about a 90% decline in the overall soy market in Malawi through that. And so we were sitting with our farmer support agents and talking in broad terms, and we had Anna Chilimazeni, who's one of our farmer support agents from Mitundu. We sat her down in front of ChatGPT just because we wanted to see what it would do. And she started typing in questions very specific. And she said, "What do I do about soy blight?" And she got a lot of recommendations from, catalogs from soy farmers in Iowa, and it was not appropriate. Yeah. It was just way off. And she asked a series of very telling questions, but at the end, I think what really woke me up to the potential of this was her turning to Greg, to Paul, to myself, to our CEO, Atul, who happened to be in the room as well, and said, "If I had this tool, my farmers could have saved their crop. Wow. Can I have this yesterday?" So really, when we look at the advances that we're having, they have to be farmer-led, farmer-driven, and farmer-asked for, especially if we're looking at trying to do this on a cost recovery basis. Again, that idea about customers instead of beneficiaries. And as a result, we were able to build out our first artificial intelligence chatbot, and a lot of discussion. So let's build our own app and our own interface like everybody wants to do, but instead, all the farmers we were working with were already on WhatsApp. So why rebuild it?
Yep.
Why not just build it open source, launch it out there? How do we make sure it's more appropriate for Anna and smallholder farmers in Malawi? We formed a partnership with the Ministry of Agriculture to exclusively use their authoritative text in the Good Agricultural Practices Manual. And as a result, we're seeing farmers get access to information through our farmer support agents in what used to take a 2 to 3 week process on average to get answers like that, now coming down to a half a second. And then adding on everything else that's exciting, from photo recognition to voice notes to local language translations on the spot. It's just, for me, to see how, in relative terms, how cheap it can be to build something that is monumental in terms of the farmers that we serve. And even when I sat down just sharing my excitement about the news we received yesterday of the largest telecommunications network in Kenya really partnering with us to look at how do we build a pathway to scale this directly to farmers in Kenya for over 8 million households. So just really the potential of this to scale if it's actually led on what farmers want. Right. Yeah. So I think that's really the basis of everything that defines successful implementation.
I have to be honest. When I first read about this on LinkedIn, there was, I think it was a Bloomberg article. Yeah. And being even in the digital training space myself, and I thought, an AI chatbot with smallholder farmers in Malawi, knowing the smartphone penetration, understanding internet access, and also digital literacy. I wondered to myself how it actually could work. Yeah. And then when we started talking and learning how FSAs work and, with the PII of the farmers, it would be great just to hear more about how this actually works in practice. So for example, I'm a farmer in the community and I, need a question answered. So how can I access that FSA, and who actually holds the chatbot? Who is the user?
Yeah, and this is where really localization becomes incredibly important. Every market that we work in is different, right? So direct to farmer in Kenya, yes, where we're looking at 48% smart device penetration across the market versus Malawi, which is 18%, and even lower still in rural areas. Right? So really making sure that you are working within the context of what's possible. With those lower rates of smart device ownership also comes very much to your point about PII and digital literacy, right? So really making sure that we're taking care and aligning with new incoming regulations, right? So MACRA in Malawi, for example, has very strict regulations about data protection and PII. So one of the first things that we've been looking at is really trying to evolve the definition of truly informed consent. Right, especially in a market where there are a lot of organizations and non-for-profits and development organizations that are not necessarily cognizant of best practices in that place. So our first step was really also developing video-based content, and Luke led on this as well, but artificial intelligence, animated videos, really helping farmers understand what their rights are, right, and how we're serving to protect those. So before any data collection, making sure that consent is given, and given in a way that's not just, signing on an English-based form, right, but truly understood in terms of the rights and the right to be forgotten. Right? So how do we make sure that internally we have the operational capacity to scrub someone's data if they ask for it? So that's a really important starting point, and especially as we seek to use a lot of that data for financial access. So how do we use that same data to look at behavioral mechanisms for credit scoring, for example? So making sure that farmers have agreed to have this data used. But in terms of that chatbot for Malawi, both our farmer support agents as well as the Ministry of Agriculture's extension officers. And to anyone else that's listening that's working in the market and has boots on the ground with farmers, you're welcome to use this to your heart's content. Although please use it judiciously because we are paying a transaction cost for every query. So we're happy to scale what we're able to support, but it's helpful for us to be able to forecast that.
Yeah. Yeah. So Okay, yeah, I think a lot of people will be listening to this and thinking, this is pretty new, right? So how do we go about potentially deploying this in the market that we work in and the country? And I haven't seen a lot of examples of this with smallholder farmers on the continent. There's been quite a lot of work I've seen in Latin America and markets like Colombia, for example, where this is quite prevalent. And when you mention about WhatsApp, it's the same story there, right? And like a general app fatigue of downloading new apps and, just using already what you have in terms of WhatsApp. So when we address literacy levels within the smallholder farmer community, you can also send photographs and you can receive voice notes from the UlangiziAI chatbot, right?
Yeah. Oh, geez, that term app fatigue. Even having to download a new app myself this morning to catch the train across town. The level of frustration I personally had in terms of having to download another app. One of our key bases, and yes, so as we are insistent on making sure that we are serving women in agriculture, we need to make sure that we take into mind really some of the constraints that rural women have. There are lower literacy rates. And so it's not fair enough to just have an English-based WhatsApp conversation in written text. How do we make sure that we are serving our key client base? And voice note-based, local language, photo recognition, all of that starts to come into play. And honestly, when it comes to agriculture, sometimes I don't have the words to describe what I'm seeing on an eggplant vine in terms of what type of aphid this is. So the ability to literally have your agent take a photo of that and it gives a whole diagnosis, not just what it is, but how to treat it. And in terms of next steps, starting to look at partnerships with agro-dealer networks to say, and here's the closest agro-dealer in your market where you can buy that exact thing, evolving it beyond just this is the pesticide to buy, but really looking at recommendations on regenerative agriculture. Here are CIAT's recommendations on push-pull methodologies and beneficial insects that you can also bring into your farm to reduce this burden. That's what's really exciting for me right now. But that's also our biggest limiting constraint. So we are absolutely insistent that the only content being ingested by these AI chatbots, they have to be authoritative texts. We need them signed off by government because ultimately the government is the steward, and the Ministry of Agriculture is the steward of agricultural practices in each country. So really making sure that we're able to bring in more content. Yes, good agricultural practices is a very good start. But how do we make sure that we're partnering with ministries of finance and regulators in terms of financial literacy content? To your point about insurers, right? I mean, you think banking's complex. Insurance is even more.
It's another level, right?
All my friends in the insurance markets, but it is to a whole nother level. So how do we make sure that there are really discrete initiatives and pushes to look at standardizing those definitions, getting them authorized by regulators, so that we can continue to push them out at a larger and larger degree.
Yeah, fantastic.
To set up a TikTok channel exclusively focused on interviewing farmers, having them share their own personal jokes while standing in their fields. Always capacity to do something new, right?
Brilliant. Well, Tim, thanks so much for coming on the show.
Jack, absolutely fantastic to be here with you. Thank you.
Well, there we go. That's a wrap. This was Series 1, Episode 8 of the Financial Inclusion Unlocked podcast produced by SIJ. Now, if you enjoyed the show, I just have a small favour to ask. First, please check out our other episodes in the series. We've got a ton of interesting discussions with experts and leaders in the space that I think you'll enjoy. And second, leaving a review and rating on the platform you're using helps more people to find the show. A special thank you to the Swiss Capacity Building Facility, SCBF, for sponsoring our first series. To learn more about how they are innovating in inclusive finance and how you or your organisation can support their work to fund more transformative projects, visit www.scbf.ch.